trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
One, two, 1, 2. One, two, 1, 2.
Habibi.
1, 2, 1, 2. Can you hear me?
Yes, Thomas.
Yes, bro.
Yes, Thomas, we can hear
Yes.
you.
Yes. Welcome back.
Yes, we can hear.
Oh, Habibi.
Habibi.
How you doing, Muhammad?
I'm fine, Alhamdulillah.
बोलते हुए हाथ नहीं जाते हो बोलते हुए हंसा ना करो
वीडियो जा रही है उधर.
Oh, it's Muhammad again. Anyway, today we have something called, which is the initial jobless claims. Are you ready to trade it? Seems like no one is ready to
Yes.
trade it. Hey Christian, ¿cómo estás?
Muy bien, gracias.
Muy bien. So, counting jobless claims is coming up in 20 minutes. Can we make an analysis in 20 minutes? What do you think? Nothing? All right.
Hello, Thomas. How are you?
Hello, Shakil. Good, thank you. I thought everyone is sleeping.
Just joined, so
Good. Elitman is asking, what big trade plan? The trade plan, or the game plan today, is very, very simple. It's important that you're trading, you don't over mystify anything. You keep it short and keep it real. That's the most important. We had a long position this morning which fully hit take profit. That was a very good position. And now we are about to experience the jobless claims data release. Now let's have a look on the open positions, shall we? So I closed down the long positions because we are very close to the data release. And it was a long position, but do I think that price is gonna continue higher? No, I don't think so. What do you think makes me say this?
Well, maybe because it's August and everything is hawkish right now.
Yes, absolutely. Everything is hawkish right now. So if you look at the previous data, for example, what data was yesterday, Christian?
Yesterday was hold on. Sorry. It's today. The construction permits?
Sorry, the day before. Tuesday.
Oh,
Tuesday. There was a big data on Tuesday, wasn't it? Retail sales, in it.
the retail sales, yes.
Retail
Core
sales.
and retail, yeah.
Yeah, that was it inflationary or deflationary?
That was inflationary.
Very inflationary. How did gold react to the inflationary data?
It went down.
It went down big time. And the FOMC pushed down even further down. Now, if you focus on the technicalities first for a minute, you don't have to be a superstar trader to identify this market structure, right? This is a bearish market structure. And this plays very well to our advantage because most of the data that comes out from the US keeps getting inflationary. Week on week, month on month.
Best way to burn fat and get shredded is not
and it's good for us. And if you look at the forecast today for jobless claims, let's stop for a second. We have 19 minutes, so don't jump in and out in positions before the data. I'm going to tell you because I'm going to front run today. But in order to make a decision, first we need to understand what is initial and continuing jobless claims.
It's expected to be lower than previous.
Yes, but do we understand what is the jobless claims?
It's the reading of how many jobs are being more or less in the market.
So it says claims,
There's more.
jobless claims. So it's unemployment benefit, isn't it?
Yes.
It's unemployment benefit, but it's called jobless claims in the US. And initial is the first time claimants, continuing is people who claim unemployment benefit for 2+ months. So both of them are important. Personally, I favor the continuing jobless claims because it signals the real strength of the job market, the real strength of the labor market. And if you see that the continuing jobless claim is set to be increasing, meaning that more people are staying in unemployment, which is deflationary, so it's going to push up gold. But the initial jobless claims, on the other hand, tells me that it's a decreasing number, and if less people is claiming unemployment benefit, that is inflationary. So completely the opposite of what the continuing jobless claims forecast is. So it's very contradicting, the forecast today, very against each other. But something tells me that today the data is going to continue lower because it's going to be a strong data print again. Now, this is not financial advice, and this is certainly I don't want to tell you how to trade and what to trade, but I think, in my personal and humble opinion, and I entered into a short position, that price is going to continue lower because we're going to see a inflationary data print. So because if we have a lower jobless claims number, it's very important if you're a risk-averse trader, if you don't want to risk anything based on assumptions and conclusion and research and all of that and macroeconomics, wait for the data. But those of you who want some excitement and if you want to hear my honest opinion, I think that the labor market is going to print another inflationary number, meaning that it's lower jobless claims number. So I think it's going to be inflationary, and we know that if the data inflationary, that's going to push gold lower. So I did enter into sell position, front running the data, but it doesn't mean it's going to happen. It could be a fake out, could be higher jobless claims, could be anything is possible. So this is where you have to measure up what kind of trader you are. Do you like to front run the data based on your initial analysis and research and whatever you do? But I believe that the US economy is still very, very overheating. So my personal view, and this is not financial advice, my personal view is that gold is going to continue lower. But those traders who are more risk averse, and those traders who don't want to front run the data or anything, you have to wait for the freaking data, because anything is possible. If the jobless claims is going to be lower than expected, gold is going to push down. But if it's higher, price is going to break the previous high somewhere here. That's too much. It's going to break the channel first, and then it's going to break the previous high. It's going to continue higher back to 1913, even 1915 is possible. What do you think? Is the US economy overheating, still resilient?
According to the news that you sent in the daily reading, it is.
Mm-hmm.
Hello, Thomas. All is good.
Hey, how you doing, brother? Wie geht's?
Fantastic. I will be the lower one.
Hi, Thomas.
Hello. Muhammad Jamal Kanilazi.
Yes, Thomas, how are you?
How are you doing, brother?
My younger brother is sitting with me. His name is Ali.
Ali,
He is
how you
saying
doing, Ali?
that you. Yes,
Ali
he's
is a
saying
bit
that
shy, isn't he?
Thomas is looking like Andrew Tate.
I'm going to block you.
No, sir.
You could have said
No,
Dwayne The Rock Johnson or...
No. He's just saying me that he suddenly came into my room.
Mm-hmm. What are you boys doing in the room?
Baby.
Doing some analysis together, probably.
What do you analyze? Analyze.
Thomas, they doing deep analysis.
Okay, so yeah, initial and continuing jobless claims have contradicting data. One of them is inflationary, the forecast. The other one is deflationary. So it's going to be a tough ride, a rough ride. But, and this is what I always say, you have to make your analysis. You probably heard this from many forex gurus, but what I say is, yes, make your analysis, but not just draw lines and resistance and support. Make your analysis based on fundamentals and macroeconomics, because it is financial news that drives the market. It's not trend lines and channels. You know, this price could easily break out. It doesn't look like it, but it could easily break out to the upside. Most important is make your own analysis and come up with a plan. Doesn't matter what your analysis shows you, it's a buy or sell, but always have a plan. How does a trading plan look like? This is a common question. A trading plan could be, a set of rules dictating you how to trade in general. What is your position size, your risk appetite, your, these kind of things. But what I like to do is also plan your day ahead. Now, today we have initial and continuing jobless claims, and now I'm going to show you how I do fundamental and macro analysis strategy. So, because I'm betting that the US economy is still overheating and the job market is still too strong and will be able to suck up all the excess unemployed people, meaning that it's going to print a inflationary number, which is pushing down gold. So the first thing, we know that initial and continuing jobless claims coming up in 10 minutes. The data is contradicting, but they have a bias, which is an inflationary bias. Okay, so far so good, but how can you make money out of this? How can you implement the theory in actual trading execution and strategy? Well, the first thing is you do a scenario analysis. How to do a scenario analysis? You can do it in your head, but I guarantee that 95% of traders who has some kind of plan or forecast or imagination in their head that, okay, if the number is higher, I'm going to sell. If it's lower, I'm going to buy, blah, blah, blah. I like to draw it down. Maybe it sounds childish or looks childish, but I like to visualize it. If the data comes out, for example, very mixed, then I know what to focus on. So my bias today is that the market is still overheating, the job market and the US economy. So it can go up and down. When is it going to go down? Well, if the data is inflationary. When is the data inflationary? If the jobless claims lower than expected. Right? Do you follow me so far?
Yes, Thomas.
Okay. And the other scenario is it's going to go up if the jobless claims is higher than expected. And by the way, gold is front running. Good thing that we have entered into a front running position, which is a sell, because I'm expecting the US economy to overheat and the job market to suck up all the excess unemployed people. So anyway, but this is the position that we're currently sitting in, and it could turn into losing position. It doesn't matter. And what I was explaining is that you always have to have a plan. And the plan is, if the jobless claims higher than expected, I'm going to buy gold. The jobless claims lower than expected, I'm going to sell gold. Don't be afraid to write it out. I think this is one of the best ways to learn how actually data is moving the markets. Any questions about this so far?
No, Thomas.
Okay. So now that we have the strategy and the plan, because it's always better to be a warrior in a garden than a gardener in a war. It's one of my favorite quotes. So we know exactly what to do when the number is out. And we also have, or I also have a bias, which is going to be a bearish bias. So it's up to you now whether you're going to front run the market with me, because I'm in a sell position. So I place sell around somewhere around here. Stop loss is around 1902. A little bit higher, 1903.6. It's only a small position, and I'm targeting, be reasonable. 1895, 91. That'd be very, very nice. Yeah, that's it. That's the strategy. This is how you come up with. You have to determine and identify whether it's going to be, inflationary or deflationary data, and once you have all of this, then you can start speculating. And we have 7 minutes, ladies and gentlemen. Those who would like to join the Alpha community to get the same level and depth of macroeconomic analysis and fundamentals and understand what's happening on the market, look to your right.
Thomas, I think you're on mute.
Look to your right. Look to your right in the chat. There is a link You can join the alpha community and get the same level
Thomas,
of
you are mute.
analysis. Am I? Oh, how long I've been muted?
Maybe 1 minute.
2 seconds.
Ah,
30 seconds.
20 seconds. Don't scare me. But anyway, read the chart. Everything is laid out for you. I've done the heavy lifting, the analysis. My bias is alpha today. Those of you who want to join the alpha community, look to your right in the YouTube chat or below the video. There's a link. How can you join the community and how to get morning briefings every single day.
Thomas, it's Amy. Hi.
Hey.
I'm a little bit confused because when you was explaining your analysis, you said that when it's inflationary, then that brings gold down.
Yes.
But in actual fact, if the jobless claims are inflationary, that's not good for the currency, right? So if it's inflation,
it is good because.
But isn't it better if it's deflationary and that's good for the currency?
No, because if it's deflationary, that means that the central bank, in this case the Federal Reserve, is going to start cutting or pausing the interest rate hike and then going to cut the interest rate. Now, interest rate is going to determine the yields on the government bonds, on the corporate bonds, on the debt markets. So the yields are the alpha and omega of finance. Now, if they cut interest rate, then they're going to reduce the yield on the government bonds. If they reduce the yield on the government bonds, why would investors want to buy government bonds or corporate bonds or any debt instruments if there is no yield or less yield? There are better yields elsewhere as they start cutting. Now, this is going to cause an outflow of money from these assets. And if there's an outflow from these assets, then, euro traders have to exchange back the dollar denominated asset to euros, so it's going to cause a depreciation of the currency. So actually it's bad for the currency, but inflationary is going to be good.
Okay, thank you.
You're welcome. Just a service announcement. As soon as we have the data, I'm going to stick around, whether it's a losing or winning, doesn't matter. I'm going to stick around for about 10-15 minutes. Then I have some personal stuff to do. So, it's summer. I want to enjoy the summer, and I recommend for everyone to do the same thing. And we have 3 minutes, 45 seconds.
Oh, Habibi.
Three minutes.
Oh my god. Today is going to be a difficult trade because we don't know what. It could be a surprise to the upside. More jobless claims. That's going to push up gold. And it's August, so I keep saying that please, please, please don't risk too much. We could have fake outs. We could have. You know how the market is in August. Keep it easy. Keep it simple. But that's my expectation. Sam, all in Sam, says it's an easy long. Well, on Tuesday you said it's an easy long too, but actually market fall, Sam. So I hope you're not risking all your family savings again. But even a broken watch can be right twice a day.
Good afternoon, everyone.
Hello, Bram. How you doing, brother?
Good and self. Glad to be attending one of these again.
Good to have you again. Yeah, I just want to get out from trading now. Want to enjoy the sun while it lasts. You know, it's summer in Europe. Doesn't last too long. UK, it's only 2 weeks, whole summer.
Yeah, we've got one sunny day today. So.
So yeah, I want to go out to the nature and enjoy summer. But we have to make money as well. But I'm not risking too much, so I'm only risking, you know, one standard lot on this trade. That's my open position, and we have 55 seconds. So I'm betting that the US economy is still strong and resilient. It's going to push down gold because we're going to have an inflationary data. But don't quote me in this. Anything is possible. I'm just showing my bias. It's not financial advice. We have 37 seconds to go. What do you think? Is gold going to go up or down?
It's gonna bleed.
Hopefully down.
Sam says that easy there, Thomas. Just trust me on this one. Well, let's wait and see. Either way, I'm not risking too much. I advise the same for everyone else. So
it spikes up and fall down.
Most likely.
We'll go sniper.
We have 8, 7, 6, 5, 4, 3, 2, 1, and jobless claims is out. Can anyone see jobless claims? Oh, higher than expected. Higher than expected. Hold on. I'll just go back. Investing.com. 239. Initial is actually okay. Gold pushed down. That's a very nice. Let's have a look on the position. There was a nice initial push down, but I will lock profit now, guys. Okay, so it is running in. You know, 12, 20, 50 pips. Let's quickly have a look on the data. Quickly. So the data was continuing jobless claims higher than expected. If it's higher, gold is going to push up. But the initial was actually much lower. No, significantly lower? Just lower. Close down the sales, guys. Just wait for a second. It's very mixed data. Continuing higher than expected. That means it's going to push up gold. But initial was actually lower than expected in the forecast. So data is mixed, isn't it? What should we do, guys? Buy or sell?
Buy. Pretty mixed.
I will keep myself.
I'm gonna keep myself as well, but I'm only risking.
I will keep myself. It's very small. Small data. Very small gap.
Yeah.
Should I?
I will keep myself.
The general trend is definitely, you know, bearish. We had the FOMC meeting minutes yesterday, and that signaled that you know, the Fed is not hesitant to further increase interest rate. They still deem that the U.S. economy is overheating. But today the data is kind of mixed. Don't forget that we had the retail sales on Tuesday, which was very inflationary. So now it's I think it's the typical scenario that we had the mixed data. So it's the market sentiment that's going to decide about what's going to happen to gold. Right now, the trend hasn't broken, the counter trend that, you know, gold is going up the stairs, coming down the elevator. This is the kind of channel I'm talking about. It hasn't been broken yet. But, no. I think that's, I'm going to put that in break even. I'm going to keep it safe. Plus I have another position which is running from higher. Oh, let's have a look what Investing Hub says. Let's go back to TradingView for a second. Let's have a look on. That was a nice drop. Like 30 pips.
Initial went down.
Initial was lower, but actually was, let's call it in line with expectation, okay?
Yeah.
Well, the continuing has increased, which is deflationary.
Deflationary means gold up.
Yes, but look at the Philadelphia Manufacturing Index. There was a whopping surprise.
There'll be some stills in there that are not all the primary stills in that. When it must be painted, and all the structural still, like all the outside.
Someone's still at work. Oh, Saiful Haq Mohammed is asking, is a buy or sell? Well, we don't know, brother. I'm in a sell, but the data was very, very mixed. So if we jump back quickly to the economic calendar, you're going to see that, you know, I prefer sells, but the data was very mixed. One inflationary, which is continuing, deflationary was continuing jobless claims. Initial was in line. Philadelphia was inflationary, so very, very mixed data. Technically speaking, you can see that, you know, it's the top of the channel, so it should be a nice continuation sell-off, go up the stairs, down the elevator. But it's struggling now, and I think it's going to wait for the market to open. But guys, I made the analysis. I explained everything. I'm gonna call it a day. Go outside, have a nice cold beer, and I think now it's, if you want to stay to watch the market, be my guest and let me know how did the position go. Data is mixed. It's up to you guys to decide whether it's a buy or sell. You have all the knowledge, all the information. For me, it's Friday now. I want to enjoy the weekend. Thank you so much, guys, and see you all for Monday on the morning briefing. Have a good day.
Thanks, Thomas.
Thank you, Thomas.
Thomas. Have a great day. It's Thursday today, Thomas.
I know it's Thursday. And those of you who would like to join the Alpha community, you can do so by going into the Alpha FX website. There is a 50% discount. There's only 2 membership left. Take it and you can get daily morning briefing, daily macroeconomic analysis. And just to highlight, my bias is still short on gold, but the data is very mixed today. So it's up to individual interpretation, whether for yourself it's bullish or bearish because of inflation or deflationary. I'm out of here today trying to enjoy the summer. Thank you so much, guys, and have a very good day. This is the Alpha FX.